Good day. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Thursday evening, the 26th of May, 2022, getting on to 5:40 p.m. Central Time. Want to wish everybody a very nice holiday, the Memorial Day holiday. Remember, markets aren't open on Monday. Some of the futures are. Remember that. They trade limited sessions, fully electronic, of course, but you'll get some of that, so you might want to tune in and see what those are doing. Now, what do we do with this? Let's talk about the market. You've been down 7 weeks in a row, so we're getting a bounce. A lot of traders are making more out of it than it's a bounce. A lot of them thinking out, you're finally getting the players coming in, and the people that have been out are buying a little bit. I see that. But do I think that we've gotten a low? You know, you never know that you've gotten low till after the fact, but I haven't seen bear markets, and these are bear markets. Some of these stocks, as you know, they're down 50%, 40%. They're bear markets. And to end up on this whimper, nah, I don't think so. I think that what we've got is the first serious bounce after a prolonged break. I hope you can appreciate that. I don't know if you buy into the idea yet, as so many are saying, that, interest rates have slipped back from the 3.2 area on the 10s back into the 2.7s. That's it. The market peaked out. Many parts of inflation are backing off. I agree completely that parts of inflation are backing off. Why? Look at your pending home sales. Look at your new home sales. They're down. Want to raise the price, you're not going to sell anymore. So something's got to give through there. Look at used car prices. They're coming down. But food hasn't come down. Fuel hasn't come down. Things you have to go every day for, they really haven't come down. It's the things you don't need as much that are coming down in price, and that's typical. Look at what's going on at the stores. As they've got more goods in, and the people didn't go to the Walmarts, they didn't go to the Targets. You think they don't have inventory built? They do. Now, where the middle class to the upper class people are going, the Macy's, the Neiman's, they aren't having that problem. They're selling their goods. So those with the money in hand, they're still buying in those stores. They're still enjoying that experience. The other stores, if you will, the lower tier in the retailing, well, that's not there. Now, I haven't seen the LVMHs, which are the Tiffany's and the top-end jewelers. I'd like to see what they're doing, and LVMH is much more than a jeweler. So we'll see what they do with their top-end bags and the like that. They're still missing the Chinese market, so whatever you look at, you have to take into account that's a big part of their business, and that's shut down. So when you read through the numbers, you have to adjust for things like that. In Zoom, we've had this rally, but like everything else, you go to the technical picture. And by the way, I'm going to be showing you in a little bit here if I can. Let's see if I can call it up. Our guide to technical indicators. That'll come in at the end of the show. So as I'm doing this, we have a booklet that explains all this for you. So it's volumes 1 and 2. Stay tuned for it. As you look at the market coming up like that, you start applying the indicators. Now, I wrote this indicator called a swing line when my son wasn't, my son's late 30s, and he was, I think, 13 at the time. So that gives you how long ago I created this. It has served me beyond well. What it does is it gives me an idea, is there a trend in the market? Because if I come back on this chart, I can't tell where the lows and highs are. I'm sure you can. I can't. And when I created this, I now can see that the market's got higher lows. It started actually right here, higher lows. And then when you crossed over, I've got the higher highs. It broke a downtrend. It came out of the sideways action as well. Okay, where could it have gone? Well, it was all taking place in the battle right here at the 18-day average of closes. The market had gotten under that, fighting at it, then it stuck its head up. Okay, where might it go? Well, one of the numbers might be 122.17, another moving average. There's window envelopes that I don't show ever on these updates at the end of the day. They're for my subscribers in the morning updates. And what else? What about Bollinger Bands? Well, I'll be a son of a gun. You're back up to the upper Bollinger Band. You got as high as 108.17. That number is 108.79. I think you're going to see profit taking against that number. It would not surprise me. You've just come from 79 all the way up there. It's over a 20% gain in the market very quickly. That's a big number, right? It's big. I'd be surprised if you don't get it. Let's assume I'm wrong. Then 122.17. Okay. But I think this is where the pros are coming out, right here. That sometimes they don't need that top Bollinger Band. You're already overbought, a thinning out of market conditions. That's what I'm thinking. AMC, I'm counting on this market to give us a lift. I've told you that. You don't want to be short this market. You want to count that the consumer's going to go to the movie theater. You want to count that the summer blockbusters, I didn't make up that term, that's going to happen. People are going out again. We see that in all forms of the data, the economic data we're getting. This should come alive. Can it clear the 1255? That's the first resistance. We'll see. It got today to 1288. Couldn't quite do it on a closing basis. But that could open the door for higher prices. I don't think anything going to run away. I'm not looking for this again. That doesn't mean it can't happen, but I'm not looking for it. I see a lot of resistance up there, but I see reasons to not be short. When I look at Apple, Apple is fighting just what I have been saying here. Number one, I never believed the Chinese. I think they lie. I mean, really lie. They told you there's not going to be a problem, that Apple's going to get their parts. Do you remember that? That's about 3-4 weeks ago. Read the newspapers. And they're making sure that the factories stay open to deliver them. And then we heard that Apple didn't get the parts. They put that in their earnings. The stock tanked. So now what Apple's done smartly is they said, all right, don't build us 240 million new phones because we all want the new phone. Remember, the real first big change we're going to get is this next version of the iPhone, and there's a big pent-up demand for it. But they got to be realistic. How many phones can they get out of China? They're hoping for 220 million. That'd be great. Another outbreak of COVID, that's fantasy. But they already have to get the components going because they're normal. I don't know when they'll do it. September on is when they normally come out with their new releases. I'll be first in line. I need a new phone. But lower low, higher high, that sort of is given the first indication, if you back away from this, that the market is now trying to lift itself out of this malaise and get itself back at least to the 18-day average. And there's an open path if it ever, you remember, this has a huge following. If there were a following here that people just started blindly buying it all the way there. I saw analysts today coming out with 200 as their new targets. I know why. It's just what I told you. The demand for this product, their products, is immense, but the iPhone 14 should be well received and a big number for it. In Disney, maybe this is when it comes alive. This has been deader than a doorknob, and here we go. The market finally got to the pattern of lower highs, lower lows. The key was 106.03. You hit 106.13. You stepped away from the downtrend. You have not entered an uptrend, but momentum is leading the parade. Any close over 106.90, I think, will lift the market, and I think we'll look back and say that was the low for this into the summer months. That's what I'm hoping to see. I saw Jets was moving up today, so I'm seeing enough things moving that I'm believing that. The financial services, well, they've come alive. Wow. They're no longer bearish. That began yesterday. Yesterday was when the market came out of all this. I'll show it to you. That's bearish. That was through last Friday. You then started playing around with the market Monday, Tuesday. Look at how you're fighting at the 18-day average. Then you got up yesterday, and with this, I got the pattern of higher lows, higher highs, and the very first close over the 18-day average since back in April. That should give a lift to the market. In other words, the Johnny-come-latelys are likely to say, I'm going in, I'll put a stop under the lows of Tuesday and see if we can reach for the Bollinger Band. Haven't done it yet, but that's what I'm assuming the market wants to do. In XLI, once you hit the lower Bollinger Band, that's where the pros, each leg, have come out of the market. Now, we've got a little different pattern that developed. Let me show this. This is important. Each time we've hit it, we've gone and come straight down from the Bollinger Band. Gone up to the 18, straight down. The bounce here, instead of going straight up to the 18, fell back. That's a different pattern. If you take out this high of 91.44, it breaks the downtrend and sets up a potential test of the 18-day average of closes. Just what you did. Now you're in an uptrend again. How long can it go? I don't know. Buying it at 93.15 and wanting to put a stop at 89.23, I think it's too much money to risk, to be honest. But if it wants to run, objectives there. I don't know. Could be a lot of short covering just in front of the holiday. Semiconductors, ugly chart. Higher highs, lower lows, momentum already approaching, not there, but knocking on the door. Anything over 70 is overbought, approaching overbought. I don't know. I just don't see anything on that one. In the home builders, as I said, I was amazed, blown away that the home builders were all up because they're making more money. I mean, I'm watching new home sales collapse, so what they're doing is they're taking what they have and they're passing on the increases, even though they may not have them. They're passing on the what-if increases the consumer's paying, and it took these stocks up. That's what I envision. Now, they did get today a little help with mortgages falling from 5.25 back to 5.10. That's a big drop. I mean, it doesn't sound like it, I know, but the way mortgages work, they normally go a couple of points here or there, not 15 basis points all at once. That's a big move any way you cut it. Maybe you hope for 64.88. I think it's just going to be more churning in here, to be honest. Energy, I'm bullish. What can I say? There's no replacement for it. And if China comes out of this draconian lockdown that they have, their factories are going to want a lot more oil. And Russia's got all that oil. As I explained, there's, I think, 62 million barrels floating around out there looking for a home. China's going to take Russia over the coals. Just enjoy the show. It is going to be a show. I've seen what they do in grains in Europe. I've seen what they don't get that much. They get it from South America and the U.S., but whatever they get, they're not easy to deal with. They're rough. And the reason is you don't like how they play? Oh, they don't have to buy from you again. They're the big boys. And that's how it works. So Russia's climbing in bed with them. And they're going to nicely say, I appreciate it. We're your client. We want your oil. You need us. We just can't pay that. So Russia gives discounts. You know that. They can afford to. I saw how the Saudis did. Did you see how Saudi Arabia, what they declared as income? It's insane for the month. For the month. I mean, we are talking numbers that are over the top because the barrels are so much money. Remember, they were talking that in Saudi Arabia they needed $100 a barrel for their budget. Well, they got more than that. When you look at the gold market, gold has just sort of come to a point where it's sitting waiting for something. Now, will it get explosive? Well, inflation hasn't gone away. The only headwind that's been removed, fundamentally, is the headwind of the strong U.S. dollar. Other currencies are coming alive. You get into trouble in this market if you get back underneath 171.73. That would be a very ugly number right now. That would break this pattern and actually turn the trend down. Close under 171.71 would actually turn the trend into a bearish trend. So if you're a buyer, you don't want to see that. If you can get up, you're looking for the 175.96 level. That's what I told my traders this morning. In GDX, I told traders not to touch this. It's just not the place to be compared to the gold itself. The pattern just sitting here, and you got the 200-day exactly right over you. You know, if we come over here, you got some runway to get up to that number. But here, you got to get into a very large, a very large 200-day average. I'll let somebody else have that. Copper fighting a battle, but too overbought. I never would tell a trader to buy an overbought condition. Certainly the market's got a target still, as I see it, of $41 looking at it, but you could easily just set back here and get through yesterday's low of 38.7. Let's see, what was yesterday's low? 38.35, and all of a sudden you're back into a minor downtrend, fighting another crazy battle as you're back to 37.57 before you know what's going on. Overbought, you either pay attention to your rules or you don't. I don't care what I miss. I care about what I'm in and what I want to get in. If I'm not paying attention to my rules, what good am I to anybody? AGG, I'll stay with what I said. I don't want to play the long side of this, TLT, BND. I'll let somebody else own it. I know that the surprises that come will be to the bear side, not the bull side, because the Fed has the markets back. When the markets and stocks, for example, were going up, the Fed had the markets back. You could always count on them doing something to support the economy. In this case, you can count on the Fed that every time they see something they don't like in inflation, to have their little presidents from all the different regions go out, and they're not little presidents in a negative way. It's like you got a group of guys. That's what I mean by it. Certainly not disrespectful. And they go out and they tell the story as to why the market has to have more interest rate hikes than what they're doing. So the surprises to me will be to the bear side, not the bull side. Dollar oversold a little bit. Let me get over here. Oversold. FXE getting overbought against the upper band. But it's a holiday market, my friends. And when you get to holiday markets, you get crazy action. So as I said, if you don't understand how to work with all this, I helped create years ago with Modern Trader and Futures Magazine, putting together guides to technical indicators at that time. Then they gave me the right to keep it and work with it to pass it out to you. I love it because we picked what we thought were the best articles on the subjects to explain the basics. It's not going to teach you to do what I do. It's going to take you to the first level where you understand what they are, the importance of each one of them, how to work with them. That's what it's about. So to get it, just simply go here to our website, go to the free offers, follow my finger here, the magic finger as I'll call it. You come up here, you'll see a cursor, take your cursor, move it there, you'll see an icon, give it a click, and that'll take you to where you have to go. I'm going to do my best to get this out to you, a weekend edition, tomorrow after the markets. I wish you all a great Memorial Day, and I will see you all again come Tuesday after that. Take care.